All right, we're live. So welcome back to Dapp University. So today we're going to talk about one of the biggest threats for the entire cryptocurrency space as a whole. I'm talking about an existential threat here. A lot of people think it's regulations. A lot of people think it's some other piece of FUD that comes out on a regular basis, but it may not be what you think. So we're going to talk about that in this video. Look at a lot that's happened in the crypto space since yesterday. We're going to take a look at the cryptocurrency markets, answer some of your questions, and a lot more. So before we get into that, if you're new around here, hey, I'm Gregory, and on this channel I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step by step from start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right. So I've got people jumping in the chat here. Welcome, welcome. So we got Culture Hives, Stefan, Hash Brown, Somali, Big Fitness, RJ, Taylor, Anthony. Hey, welcome, welcome. All right, so let's jump into this. So let's talk about one of the biggest existential threats for the entire cryptocurrency space as a whole. Okay, so this may not be what you think. So let's talk about something that essentially is supposed to be there to help out the cryptocurrency space, but could, really be part of its downfall in the long term. So what is it? Well, it's stable coins. Okay. So what is a stable coin in the first place? If you're branded a crypto, it's supposed to be this thing that gives you this massive benefit. Okay. So think about cryptocurrency prices go up and down like crazy. They're insanely volatile, like Bitcoin, Ethereum, all these other smaller alt cap cryptocurrency or smaller cap altcoins, right? But a stablecoin lets you essentially just move your money over there and the price doesn't change, it doesn't really change, or has way less volatility, almost at an imperceptible level. So how these different stablecoins work, really matters. We have fiat-backed stablecoins, we have USDC, we have Tether, we have DAI, was a crypto-backed stablecoin. We've seen some pretty not so great experiments with algorithmic stablecoins this past week, right? We saw the rug pull that happened, the Cuban Missile Crisis people talking about with Titan, all right? So stablecoins actually could be one of the biggest threats to crypto, and here's why. Okay, so first of all, it starts with the fiat-backed stablecoins. Now, we've seen a lot of FUD come out with Tether over the years, people wondering, is Tether actually backed? And so if you're just brand new to that conversation, what does that mean? So, a cryptocurrency, in order for the price to not change, you have to have something else that is, keeping that value. So if you have a stablecoin like Tether, for example, that's supposed to be pegged, 1-to-1 to the US dollar, then basically you're supposed to have assets in reserves somewhere that, basically where people can redeem it, and you have all those assets. So it's not fractional reserve like a bank would be, where people, if they try to go redeem their tethers and there's more tethers than there are backing, then that could be a problem. Okay. And so that's something that, people have said, like, over time, hey, we're worried about this. And of course, we see report after report come out that tries to vindicate, Tether from this potential risk. And some people, it satisfies people, does not satisfy others. But one thing we can actually see is the correlation of stable coin supply and a cryptocurrency market price increases. Okay. So you can check out this metric here, where basically you can look at the entire stablecoin supply across different coins here, and you can see kind of where it lies in the trajectory of cryptocurrency prices during the bull markets. Okay, so you can see essentially the total supply of stablecoins going up and up and up and up and up and up and up, and kind of flattening out here, and flattening out around the time that the cryptocurrency market peaked. Okay, so I think people are worried about this because they fear that a lot of the crypto markets are just like, essentially inflated with money that doesn't really exist. I know that's kind of a funny conversation to have with cryptocurrency, because some people don't think cryptocurrency is like real money in the first place. There's tons of hot air floating around everywhere. But the whole idea here is people are worried about essentially these stable coins that are supposed to be fiat backed that don't actually have the backing, that there's like all this just, phony money there that's getting just printed more and more and more to actually buy cryptocurrency, especially Bitcoin, and make the price increase. And you see these types of, curves here where the supply is going up and up and up and up and up, and come out at a peak around here. Now, there's other factors about why you can see this trend. It's definitely a correlation type thing, not necessarily causation. But I think one of the biggest things people are worried about is if these things aren't as backed as people think that they are, that essentially that could cause existential risk for cryptocurrency, because what if one of these major stable coins goes down and people can exit, right? If it causes a liquidity crisis, or basically all this value that's supposed to be there just evaporates. Okay, this could be a major risk for crypto. So I see people talking about this, Tether maybe not being as vindicated quite as much as people think it is. Okay, there's still lots of suspicions. I've seen lots of reports go around online about Tether and what people are thinking about that. We've also seen other things happen this week with the algorithmic stable coins. Okay, we saw the Polygon experiment with Titan. Mark Cuban was involved, and afterwards he was talking about, hey, we need tighter restrictions on what we can actually classify as a stable coin, because these algorithmic stable coins are blowing up people. So it's another reason people are basically putting their money in something that's going to be stable, and it just completely evaporates like that. That's not that big risk. So they pose risks on many different sides. I mean, there's something like DAI, for example, too. DAI is an amazing stablecoin that's done really well over time. But, one of those things where if a stablecoin loses its peg, then that could be a really bad situation as well. But the bigger picture here is definitely the stablecoins not having the backing that people think they are, and these fiat-backed stablecoins that don't have the same transparency as something like DAI, where you can actually audit all the cryptocurrency that's backing that value on the chain itself. So that's something to keep an eye out for. And people are investing in cryptocurrencies to hold this stuff for the long term. They tend to forget that this really is new technology. When you store cryptocurrency, you're putting money on a blockchain, which is still a pretty young piece of technology that is still proving whether it can work long term. And that's why, for me personally, I would rather have my assets in something like Ethereum or Bitcoin. Right? Bitcoin's been around for over 10 years. We have a lot of confidence in the security of the Bitcoin blockchain compared to other things out there. Same thing with Ethereum. It's been around for, quite some time as well. A lot longer than some of these other newer projects. All right. It's securing tons of value on top of it. So from a technical perspective, you got to think about it that way. And then you also think about the other risks that are associated, like stable coins, for example. So as always, you have to be careful with this stuff and know what you're getting yourself into when you're playing this game for the long term. So let's go ahead and jump into the cryptocurrency prices here. Let's take a look. Let's go ahead and check out the prices. See if we got people in the chat here. So let's see what's going on with prices. So Bitcoin is still, we're fighting hard to maintain this support here. Okay, so let's just see if we can zoom in here. So we're still in the wake of this kind of major correction that happened in May. It's trickled down into June, hopefully seeing this consolidation period. Of course, we're seeing the daily candles here form below this moving average. All right, I know this is something that's going to get people kind of freaked out. Let's just see if we, are able to hold this low right here, or if we break down lower. I think the consensus among everybody is this, we don't really know what's going to happen next. We could look at lots of other metrics. You could look at, what's happening on exchanges. You could look at supply of long-term holders. You look at all this stuff. Of course, I'm just looking at some simple moving averages here on the chart. But I think we're just really kind of in limbo for the short term. I mean, long term, I'm still leaning bullish. But nobody's got a crystal ball. I think we're just in this massive waiting game. I mean, I do think that a lot of the hype has completely, evaporated from the space. I mean, we're seeing that a lot with, the search volumes going down, buying smaller cap cryptocurrencies going down. I think a lot of retail got flushed out. But there are some things that are still pretty encouraging, okay? So, you have to think about, you need more people to come into space to buy, right? But you also think about the interest of the overall, technology, overall interest for the cryptocurrencies themselves. And you can kind of look about that with Google Trends, which is something I definitely keep quite a bit of pulse on. So let me just pull it up here. And the Google Trends are actually, not as bad as you would think compared to what's just recently happened. Okay, so if you look at something, search term for like Bitcoin over the past 5 years. Okay, and compare it, pull this up. The search volume for Bitcoin is still pretty healthy. Okay, compared to what just happened. Okay, so when you see this major blow up in cryptocurrency prices drop by that much, sometimes that means just like game over and people are out of the space. Okay. But you do see it's not like we're back down to levels where we were, in 2019 or anything like that. I do think that there's something to be said here for this capturing the attention of the space, but not being as quite as manic as it was before, and actually retaining some of that attention, which is good for the overall space. Okay. Rather than people getting here. And literally the only thing to keep people excited in 2017, 2018 was the speculating on prices and then ICOs, right? Just going up. So here we have a lot more technology that actually makes the space sticky. So when people get into it, they're lured by prices. They still see there's a lot more to crypto. There's NFTs, there's DeFi now. We have way more, okay? And that's other reasons why I still see this thesis playing out of the more reasons you give people to actually use the technology, the more useful you make it, the more reason that it retains users, and the more users you have in crypto, that can actually correlate to an increase in cryptocurrency prices long term. Now, if you're looking for short term gains, it's not always a guarantee, right? But we're talking about actually sustaining, prices over the long term. This stuff right here matters, okay? And so one thing that, part of the thesis forming is that this big blow up that just happened, flushed a lot of smaller players out who were just trying to speculate on smaller cap cryptocurrencies, trying to watch the prices blow up. But we can still have larger players like institutions in the game, or just basically sort of, I don't want to say just like smarter individuals, but like larger people with much larger holdings, right? Who've been in the space for a long time, who are here investing for the long term, that they won't necessarily get flushed out as easily as people who are just here chasing hype and trying to get short-term gains. So it can be true at the same time. Let's just see here. Let me just pull up my whiteboard here. What can be true at the same time is essentially we could have had this big blow up, all right? So if you look at like the cryptocurrency prices over the past 6 months or so, let me just pull up a year. That's the easiest thing I can show you on CoinGecko. So if you look at the cryptocurrency prices over the past year, two things can be true at the same time. This can be a bubble, all right? But this can also still, like if you follow I can't draw a line on here, but if you follow where my mouse is going, just like a line through here, this can still be a trend higher, but this can still be a bubble. Like those two things can be true at the same time. And what's also going to be true at the same time is this can also be an exponential trend, and this could be a bubble along the way. Okay, so you could see the price action break below that exponential trend and eventually reclaim it and then trend higher over the long term. But all that stuff can be true. And, this in the short term can suck, but it doesn't necessarily invalidate the long-term, view. So that being said, we don't know for sure. It's not financial advice. We could, go into a longer bear market, but the likelihood that we're going to see something as crazy and as severe as what happened last time, it just seems less and less likely. Now, that doesn't mean cryptocurrency prices like Bitcoin and Ether couldn't drop another 50%. They could. I'm being very realistic here. But just the absolute carnage and the length of the last cycle where we just went through this insane winter where nobody cared about cryptocurrency really for, about 3 years, which you can see here on Google Trends, like I was talking about here. The attention is really important. Like the amount of attention that we lost for basically 3 years, I just don't think that's going to happen again. You know what I mean? And that's the important thing to keep in perspective here. Because I'll tell you what, you see a lot of people talking about the inevitability of crypto and all this type of stuff. There's lots of people who are ready for cryptocurrency prices to go lower to buy a lot more. I'll put it that way. So that's something to keep in mind for sure. So yesterday, we do see more big news about countries buying, or not countries buying, but countries adopting Bitcoin. So, of course, we did see El Salvador, the El Salvador news. We talked about others speaking of following suit, like Paraguay, Panama, and yesterday we do see more news about Paraguay official plans to legislate Bitcoin next month. Okay, so I don't have all the details on this, but this does look like, if you take it at face value, it does look like something that's encouraging here. So, planning on introducing Bitcoin legislation early July. Previously into June. Okay, all that type of stuff. So definitely keep an eye out for this. So more and more I can see, the Bitcoin value proposition for the developing countries being higher. And this could be a trend that continues to take off long term. So that's definitely something encouraging for the kind of short to midterm here. So we also see, I'm talking about smarter people buying cryptocurrency if the prices drop. We're seeing more and more demand for traditional finance people, institutional investors, all that type of stuff. More proof of that is we saw this yesterday from Grayscale. So if you don't know what Grayscale is, they're basically a trust where people can buy, get exposure to cryptocurrencies through that means, rather than how more crypto native people do it, of like getting on an exchange and buying crypto that way. So basically, they're already exploring more assets to add to the trust. These are not guaranteed to list. Okay, it's important to understand, but these are things that they're looking at. And this is going farther and down the curve, particularly with DeFi projects. So, if you've heard of the Grayscale Bitcoin Trust, the Grayscale Ethereum Trust, these are really popular, parts of their trust. And they're looking at like 1-inch, Bancor, Curve, ICP, some of these I don't even know what they are, like KNC, which is Kyber Network, Loopring Token, Near Protocol, Matic, which is Polygon, Ren, which is a cross-chain bridge for Bitcoin moving to other chains, Solana, UMA, and 0x. So these are other, a lot of these are DeFi-based projects that have been around, for over a year now. So as I'm saying, we have more and more demand for people to get exposure to this stuff. We're just seeing more adoption in that direction. So another thing that was pretty funny is you get so many mixed signals from this type of thing, though. Is yesterday we saw this come out. Let me just pull it up on my screen. So this was cracking me up. So yesterday I saw this come out. So, Goldman Sachs had a report earlier this week that cryptocurrencies such as Bitcoin are still not an investable asset class. So I think there's more to it than that in the report, but that was one of the takeaways that at least made the headlines. And it's really funny seeing that juxtaposition with this, which is Goldman Sachs to offer Ethereum futures and options. So I guess you got to make up your mind, which is it? Is it an investable asset class, or are you going to opt for financial products based on Ethereum contracts? So anyways, there's probably more to the report than that, but that's what made the headline. This was just cracking me up. You see this kind of stuff happen all the time. Strong statement in favor of or in disapproval of, and then complete contradiction within a matter of days. So we did see, we talked about earlier this week how the Fed meeting could have been a critical day for cryptocurrencies, as the Bitcoin price was sort of just, trying to make up its mind. Is it going to be bullish? Is it going to be bearish? Some people are worried that the market is just like on a ledge, ready to fall off a cliff. Okay. And we talked about how the Fed meeting could have been, good or bad for cryptocurrencies in those critical hours, okay? Because people are wondering, like, hey, what's Powell going to say at the Fed meeting? Are we going to hear things about, bonds? Are we going to hear things about, inflation, raising rates, all that type of stuff? And basically, for now, looks like interest rates are to be unchanged. I believe what came out of that meeting was there's a lot, but the thing about interest rates, people are really kind of wondering is, are we going to see rate hikes? And, we previously went from, oh, no rate hikes to we're thinking about or planning about doing rate hikes in 2023. So we'll see if that finish line moves any closer from, no rate hikes to 2023. I don't know if it's going to, if we're going to approach 2023 and then the deadline, comes faster, we'll see. So I didn't think this freaked people out too badly, but I think that they do plan to do that. So we'll see if that has any impact on what goes on with Bitcoin. Because people try to see these as kind of like inversely correlated. You know what I mean? At least that's the narrative for Bitcoin as an inflation hedge. And if, we'll see. So if you got any questions here on the chat, somebody says Doge died. Let's actually check on Dogecoin. So I don't hold any Doge. So I don't really watch the price that much, but let's actually give it a look here. So yeah, Doge is looking pretty rough. I mean, everything's looking rough. Yeah, everything's looking pretty rough. I was like, Theta is the only green 7-day chart here. The Monero, Shiba Inu is actually green. But yeah, this is a bloodbath out there. Hope everybody's staying safe. So Dogecoin, 28 cents. Yeah, looking rough. So yeah, other questions here. So buy ETH now or wait. I'm currently not buying anything right now, put it that way. So let's see here. Plant yourself a crypto garden. Someone says 20K BTC tomorrow. Probably not tomorrow. So here's a great question. So what order do you recommend watching your playlist if I'm looking to begin learning blockchain development? Yeah, so I'll answer that question. That's a great question here. So I'll just pull up this playlist that they're talking about. So basically, this is for anybody who wants to, get into development for blockchain. One of the highest paying skills in tech. It's a future of financial-based technology, in my opinion. DeFi has exploded. We see lots of people who are, absolutely trying to expand and build crypto projects that need to hire blockchain developers. It's such a scarce skill set. I think it's a major opportunity, especially for people right now, who got into crypto trying to chase gains and feel like the gains aren't there to be made. I've always talked about how blockchain development is one of the best solutions for a lot of people who are trying to achieve their financial goals in crypto, which is really they want financial freedom, and you can get that through a highly paid skill like blockchain. So let me show you the playlist that they're talking about. So let's see here. So basically, let me just pull up the playlist. So there's lots of different videos in here. The cool thing is that all these tutorials are essentially designed to teach you blockchain from scratch by project-based approach. So, I'm a firm believer in this because what's one of the fastest ways to learn a foreign language? Well, you do it through immersion, right? You go basically live in an area and only speak that language, right? You don't sit there with like a vocabulary book and a phrase book and just memorize everything and then go try to learn the language. You go to the place and you get immersed in the actual language and the culture itself. So that's what you do. That's the fastest way to learn coding too, because you're learning languages, you're learning programming languages, you're learning skills. So we do project-based approach. And every single one of these courses is designed, with the exception of these language-specific courses. Language-specific courses do have a place, okay? But mostly, when you want to get started, you want to just learn blockchain first and jump all in that way, okay? So you're going to learn like Solidity, which is the main programming language used for writing smart contracts for Ethereum, for Binance Smart Chain, for Polygon, all that type of stuff. You learn how to do that in the context of creating something like creating a cryptocurrency, creating a DeFi app, all right? As you go. And then you learn the other programming languages like JavaScript to build the actual website that talks to those smart contracts and lets people use them, all in the framework of building a project. Okay, so you can always go learn language specific stuff and tighten it up, but I always recommend starting with project-based learning because it gives you context, it gives you purpose, it gets you excited about what you're doing, and it's just the fastest, most efficient way to do it. So you could pick anything. Okay. If you could, I would probably recommend maybe like one of these, this Ethereum programming tutorial for DeFi, because DeFi is one of the biggest use cases for blockchain. Okay. You already learning real world stuff inside of there. You could move on to any one of these other things like the blockchain game tutorial, the YouTube tutorial, the Chainlink tutorial, but probably this one, most recent one, Ethereum programming tutorial. Somebody says, everybody chill, bubble popped and things are going back to their real value. Blockchain is still the future, but it will happen a bit slower. Yeah, I think I'm closer to that thesis. Somebody says, will the Dapp University course need updating when the Merge 2.0 is launched? So if you're talking about like whether smart contracts, so we do update things as things change, but I think the question there is, as the merge happens, like, will your smart contracts break? So theoretically, at this point in time, there shouldn't be anything you have to do to change your smart contracts in order to use Ethereum 2.0. And if that changes, of course, we'll adapt to that. So about other languages like Rust. So, I would stick to blockchain development for actual like applications, smart contract stuff with DeFi. I mean, you could go more of a core development track, and there's definitely demand for that. It's just that I think for most people, application specific development is going to be a better route because it's less abstract. You can actually see what you're making. You can see sort of the purpose of it. And there's going to be more demand really for application developers in terms of total number of people who need them. And you can also transition into other, fields of tech easier if you want to. But if you're sold out on core development, like that's what you love to do, you already know you like to do it, then Rust is definitely a viable option. But for most people who are just trying to like figure out like what do they want to do, I would point most people towards application development. So it definitely sticks solely to Web3 Solidity and JavaScript React. Yeah, I think that's pretty solid advice. All right, everybody. So that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people can learn about blockchain. If you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, just like this person was asking me in the chat here, you can go to my YouTube homepage, find this playlist here. This is free blockchain development tutorials. We're going to be putting out a new one pretty soon. Okay, so keep an eye on the channel. Subscribe. Click the like button down below. We're going to be dropping a brand new fire blockchain tutorial for you soon. Okay. So, but anyways, you can not have to wait for that. You can go check out any one of these courses. They're like Udemy courses, but they're totally free. You can download the code, follow along with the videos. Like I said, blockchain is one of the highest paying fields in tech. I think a lot of people are trying to get to crypto to solve their cash flow problem, and learning a high income skill like blockchain is one of the best ways to do that. So you don't have to speculate on cryptocurrency prices. Like when the market's going down, you don't really have a great way to make money unless you're good at shorting. So, or yield farming. So that's all I got for today. Smash that like button, subscribe to this channel, and until next time, thanks for watching Dapp University.